The state pension is going up again from April onwards as expected. Many people are wondering what they'll actually get and when that increase will happen. The amount of increase depends on which type of pension you're entitled to receive in full. So some people will get the new state pension, and that started back in 2016, and other people will get the old basic state pension, and that was from before that date. So both types are increasing by the same percentage rate under the triple lock rules. The increase brings the new state pension very close to the tax threshold now. So this means many pensioners might actually start paying income tax for the first time in a long time. The claiming process itself hasn't changed, but it's worth understanding how it's going to work. You'll need to know what you're entitled to receive before you actually retire. So let's just break down everything you need to know about the 2026 state pension increase. So my name's Sak Hussain, and I'm the founder of financialeducation.co.uk, and I've got over 25 years experience of helping people plan for their retirement. The new state pension will be £241 a week from April 26, so that works out to be just over £12,500 per year in total. And this is the pension you get if you reach state pension age after April 2016. You also need to have at least 35 years of national insurance contributions to get the full amount. If you have fewer years than the 35, you'll get a smaller amount that's proportionally reduced instead. The old basic state pension will be £184 per week, so that's £9,607 per year for those who qualified earlier. And this applies if you reach state pension age before April 2016, and that's what you qualify for. With either pension, both amounts represent a 4.8% increase from the current pension rate. So the increase adds about £11 per week for the new state pension amount, and for the old pension it adds around £8 per week to your income. So these are the full amounts, but many people don't get the full pension rates. Your actual amount depends on your complete national insurance contribution record over your working life. What you can do is you can check your exact entitlement online through the government's pension forecast service, and you can go around online and do that straight away. See, as most newly retired pensioners nowadays receive the full new state pension, or they tend to get very close to it anyway. So the difference between the old and the new pension is quite significant in weekly terms now. But remember, the new pension replaced several old schemes into one single payment system. So why is the state pension going up? Well, quite simply, the state pension increases every April under something called the triple lock guarantee system. So what this means is that pension rises by whichever figure is the highest from one of three options. And those three options are average earnings growth, inflation rates, or a minimum of 2.5%. So for 2026, the average earnings growth was 4.8% between May and July of 2025. And inflation in September was 3.8%, which is lower than the earnings this time. Therefore, the 2.5% minimum is the lowest option of all three choices. So based on that, the pension is going to go up by 4.8% because earnings growth wins. So this system has been in place since 2010 and protects pensioners from falling behind. See, without the triple lock, the pension would only go up with inflation each year. The triple lock has added billions to the state pension bill over the past years, and there's often talk about whether it can actually continue. Some people do question whether it's affordable for the government to maintain this promise forever. But for now, the government has committed to keep the triple lock in place, but in my opinion, I'd be amazed if it's still here within the next decade. But at least the benefit for now is that the triple lock means that your pension keeps pace with wage growth across the whole country. So this helps prevent pensioners' income from declining compared to working people's wages over many years. Every year the calculation happens again using the same three options for comparison purposes, and the highest figure always wins and determines your increase for the following tax year. Something people don't always realise with the state pension is that you've actually got to claim it. So your state pension doesn't start automatically when you reach the qualifying retirement age. You've actually got to claim it yourself by filling in an application form and going through official channels. The pension service sends you a letter about 4 months before you reach your state retirement age, and this letter tells you exactly what to do and includes an invitation code inside it. What you can then do is you can go and claim online using the government website, which is generally the quickest way to do it. You're going to need your national insurance number and your bank details for the online application. You can also claim by phone if you prefer speaking to someone about it, or you can request a paper claim form to fill that in instead and send that off. But you've got to remember, claiming by post is going to take longer than doing it online or doing a phone application, so make sure you plan accordingly. And you can also claim up to 4 months before you actually reach your state pension age. But if you don't claim straight away, your pension will automatically defer until you do apply. And you can also backdate your claim by 12 months if you forgot to claim initially. But backdating more than 12 months means you'll lose out on those earlier months permanently. So you're going to need at least 10 years of national insurance contributions to get anything at all. As I said earlier, for the full amount, you're going to need 35 years of contributions on your record, and you can check your national insurance record online through the government website. And that forecast will show you what you're going to get and whether you've got any national insurance gaps that you need to plug. So these are questions you need to ask yourself about the state pension in 2026. First, have you checked your national insurance record to see what you're actually going to get? Your forecast is going to show you whether you have any gaps in your record and whether there's any opportunity to fill them in with extra contributions. Because sometimes you can boost this and get extra years by making those additional contributions. Second, do you know when you're going to reach your state retirement age and when you need to start claiming? The state pension age rather, is gradually increasing for everyone. So check your specific date online now. Thirdly, will the state pension push you over the roughly £12,500 tax threshold? Because the new pension is now very close to this limit, and it's something people are going to have to start thinking about. Because if you've got any other income, like a workplace pension, you're probably definitely going to end up paying tax. Fourth, you can think about deferring and whether you claim a higher pension at a later point in time. By deferring, it increases your weekly amount by about 1% for every 9 weeks that you wait, but obviously you therefore need to live long enough for the deferred amount to be worth it. The fifth thing you need to do is, have you told the pension service about any time living or working abroad? This is because living abroad can affect your entitlement and how you claim your pension from overseas. And lastly, do you know how the state pension is paid into your account? Well, it's paid in every 4 weeks, and it's paid directly into a bank or building society account. And the seventh thing you need to do is, are you eligible for pension credit or the top up to your state pension? Because by claiming even a small pension credit award, it can unlock other benefits which you can start to claim as well. And I recommend you watch some of our other videos on pension credit and the benefits linked to that. So that concludes the video. I hope you found it useful. If you did, please do like and subscribe to the channel, and do watch our other videos on the topic of state pension and related benefits. So last thing to say is goodbye and good luck.